here with your weekly Mortgage Minute. Today is Wednesday, November 12th. And before we dive in, well, the bond market was closed yesterday in honor of Veterans Day. So I want a big shout out and give a big thanks to all of those that are currently serving and those that have served, including my sister, who is a proud Marine and served in the military for over 21 years. So thanks, sis. We are recording this too prior to the 1 p.m. Eastern Treasury note auction, which could influence the bond market depending on investor demand. And meanwhile, there is a big vote in the House tonight on a continuing resolution to reopen the government. Now, the Senate has already passed and approved this, and if the House passes it too, well, we can expect it to reach the president's desk by this Friday, potentially reopening the government this week. Now let's talk jobs. ADP's weekly employment data for the 4 weeks ending October 25th showed an average of 11,250 job losses per week, which is interesting because the ADP's monthly October report showed 42,000 job gains. But that data, well, it covers the week around the 12th, and this is then suggesting that the second half of October was weaker, and we could see a softer November jobs report, which could be favorable for bonds and therefore favorable for rates. Turning to housing, ICE reported that home values rose 0.15% in October, which is the largest monthly gain since March. Small but meaningful reacceleration is likely tied to slightly lower interest rates. Year-over-year prices are up 0.9%, and this is the first time in 9 months that home appreciation has picked up instead of slowing down. On the refinance side, ICE estimates that if rates fall just 0.25%, about 1.7 million homeowners could benefit from a refinance. And if rates drops closer to 6%, well, that number jumps to 2.7 million. The Mortgage Bankers Association reported that last week, purchase applications rose about 6%, while refinances dipped about 3%. This compared to last year, purchases are up 31% and refinances are up 147%. Great signs of activity. Average mortgage rates are around 6.34%, roughly 0.5% lower than this time last year. And finally, the MBS Highway National Housing Index slipped 3 points to 24 in November. And even though rates are lower than a year ago, higher inventory, which is 15 to 20% up higher year over year, is putting pressure on prices. Buyer activity also fell 5 points, with 61% of respondents saying buyer traffic is still slow. And 50% of the markets are reporting price reductions, showing that lower rates alone aren't yet pulling buyers off the sidelines. So that's your Mortgage Minute for this week. I'm Maureen Lein with Rate. Stay tuned, stay informed, and as always, if you like what you're hearing, please like, share, and subscribe, and I'll see you next week.